This is one of the most important videos that I've ever made for you. And I hope you take the information that I'm going to share with you, and I hope you use it to protect yourself and your family from the future that's rapidly coming at us. Hello, Northwest Arkansas. This is Coley Bailey with Fathom Realty, and I'm sorry for such a dramatic introduction to the video this time, but look, the world has actually drastically changed since the last time I made one of these monthly market updates for you. And so let's talk about it. The Federal Reserve has come out with official inflation numbers that are the highest in decades. That's driving interest rates up, and your mortgage payments are now going to be made based off of closer to 5% interest rate instead of what was less than 3% just a few months ago. And of course, we're continuing to watch the conflict that's happening in Ukraine, and we're hoping for a very swift and quick end to that without it boiling over into becoming World War III, which is actually entirely possible. And so we're hoping that that can end and peace can be restored, and then the process of rebuilding and healing can begin. But of course, who knows if that's going to happen quickly or if it's going to take years and years for that to occur. But as for what's affecting us here at home in the United States, inflation is hitting us in a way that most of us have never seen in our lifetimes. In fact, the inflation rates are higher than they've been since the early 80s. And they are going to have a dramatically different effect on the United States than they did at that time, and I'm going to get into the reasons for that in this video. So the Federal Reserve's official number for annual inflation rate in the United States accelerated to 7.9% in February of 2022, and that is the highest since January of 1982. And if you look at this chart here, the Federal Reserve was trying to keep us around you can see here the 2%, that's the 2% line of inflation for the last several years. Of course, COVID hit and things bottomed out. And the huge response that our government had to COVID was mostly to print tons and tons and tons of money. I've seen one figure that 40% of all dollars in existence were created since this time right here. And the response in the economy has been that the prices of everything are skyrocketing now, and these official inflation numbers are close to 8%. And this is all a direct result of the Federal Reserve's money printing, as well as their continued buying of things, different financial assets, but mortgage backed securities being one of them since 2008, and also buying U.S. Treasuries and keeping interest rates as low as they have, basically zero, for over a decade now. And so this is all sort of catching up to us now. And so many people are witnessing the rapid pace of change in the real estate market, and they're coming to me saying, well, how long can this last? Surely these prices are so high, we're going to see a real estate crash. It's got to be a bubble, right? Well, the problem with that train of thought is that you're not looking at the root causes of the price increases. And the root causes of the price increases essentially are too much money flowing through the system at a time when we have very, very low inventory and huge demand in the marketplace. So let's take a look at that here on our local level. So as you can see, as of the 5th of April, that day we only had 458 homes in the market, and we had sold 970 over the preceding month. And that was leaving us with less than a half a month of supply. So about 14 days, if no other properties came into the market, we would be totally out of homes here in Northwest Arkansas. And as you can see in this historical chart here, this is going back 5 years. The red line is the number of homes that close in a given month. This was March of 2020, and we had 1,050 homes that sold in that month. And at that month, we were holding an inventory of about 2,638 between both the active and the pending numbers of homes in the market. And this is a continued trend from the last almost 2 years. We've seen these sale numbers going up and up and up, and the amount of inventory in the market going down and down. And so we actually, by this time every year, we would actually be expecting more of a bump, something like this, coming up into our market. And we're just not seeing it. Not many homes are coming into the market at the moment. But we are still seeing some of the highest levels of sales that we've seen over the last several years. And that, of course, means that our prices are continuing to rise here in Northwest Arkansas. You can definitely see the trend lines here between the red line being the median sale price and the black line being the average sale price. And over the last 2 years here, we've seen even an accelerated growth in those prices. It's becoming an upward moving curve the longer that we go into the future here. Now, actually, our average sale price, this is the highest that it's ever been, $378,589 across Washington and Benton counties for homes that closed in March of 2022. That is up 7.6% in just the first 3 months of this year. If we're comparing the March numbers versus our January numbers. And then if we look at the median, it went from about 300,000, just below 300,000 to 320,000. That's an 8% increase in just the first 3 months of this year here in Northwest Arkansas. That's bringing our prices per square foot to $212 here in Bentonville, $193 in Fayetteville, and that's $184 a square foot across Benton County and $178 a square foot on average across Washington County. And so again, this supply and demand imbalance, especially in our area where we have a ton of people who want to move here and we don't have that many homes. In fact, the projections are that we're going to need something like 6,000 to 17,000, depending on the different projections, 6,000 to 17,000 homes to be built per year in this area just to handle the estimated growth of our population over the next 10 to 25 years. That is mind-boggling because we historically, the last couple of years have been selling 12,000 homes all year. So the fact that we have so many people who are trying to come here that we need, from 50% to more than the number of homes that we currently are selling every year. We need that many homes to be built just to meet that demand. That is a good sign if you own real estate here in Northwest Arkansas, because your property values will be climbing to meet as we're meeting that demand. But the big story that is propping up real estate, and in fact all other hard assets, is inflation. It's the money that has been printed that is flowing through the system, and there's a ton of money that's sitting in the banking system that hasn't actually been lent out, and it hasn't hit the fractional reserve multiplier that actually multiplies money as it circulates through our economy. And so almost nobody is talking about this, but the fact is that almost everything that we buy is going to be more expensive in the future than it is today, especially things that hold their value well, such as real estate. Real estate historically has been one of the best hedges against inflation, and it looks like it will be going into the future as well. And here's what's going on from a broad perspective. The current economic cycle is looking more and more like a super cycle that might be the beginning of an outright currency collapse or a restructuring of how the world works with money and debt. You see, the dollar is actually weakening against real assets like oil and gold and building materials like lumber and real estate itself. The Fed's ability to fight inflation by raising interest rates is severely hampered by the amount of debt that the United States government has itself. Because if interest rates go really high and then bond prices have to go really high, the United States will not be able to repay its debts. It won't be able to pay the interest on those bond payments. That's the key. And most people in the news are not talking about this, but there is a ceiling to how high our interest rates can go before it starts to affect our entire government, not just the economy, but the government itself. And so those rates really can't go that high. And because they can't go that high like they did in the 80s, now back in the 80s, they killed inflation because they had interest rates that were between 11 and 20%. They peaked at about 20% in 1982, and it killed the inflation at that time. Well, we can't do that now because it would completely tank our government. Therefore, really the only way out is to keep creating money, keep spending, and keep interest rates historically low. And what that's going to mean is that even if the Federal Reserve raises interest rates, a lot of people are talking about, oh, this is going to be so bad for the economy's going to crash, blah, 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 because the interest rates are going to, those interest rates are never going to get high enough to touch inflation. They don't have the ability to do it. So they are going to let inflation run as long as they can until something big and catastrophic happens. And probably that will be a restructuring of the global monetary system. There is a real danger now that the United States could lose the world reserve currency status of the dollar. It could be more of a basket of currencies. But this happens throughout history. This is why I'm saying this is a super cycle. There are a lot of people much smarter than me that have been studying this, and I've been studying them. And that is what it is looking like is going to happen, let's say, over the next decade or so. We will be losing purchasing power in the dollar. So every dollar that we have will be worth less in the future. It will be able to buy less goods and services in the future than it does today, especially real estate, which is why I said this is one of the most important videos I've ever made. Because if you don't own real estate currently, you need to own real estate going into what's about to come. Many experts are seeing the writing on the wall for this, and they are investing in things other than U.S. Treasury bonds. The bond market is in deep, deep trouble right now. Even the stock market is in trouble because a lot of people in the know are shifting their portfolios outside of the United States to emerging markets if they're investing in companies. There are also a lot of people who are investing in hard assets, gold and silver, things like that. There are also many investors and very wealthy individuals that are buying up land, particularly farmland and residential real estate. We've never seen institutional buyers like we've seen over the last couple of years, and it's because these people are worried that this inflation is going to run rampant, and the best place for them to have their money is in property. And so if you've been waiting to jump into the real estate market yourself, I highly recommend that you get in touch with me and we talk about my Dream Home Finder program, which will allow you to go out and find properties, whether they're in the market or out of the market, doesn't matter. If there's a perfect home that you need for you and your family, talk to me about it and I will go out there and find it for you. That's my job, and I take it very personally, and I get great results from my clients. We're closing on properties every week. And obviously, I'd love to do the same for you. Also, if you have a property, but you need to move to a different property, that's a difficult transition. And a lot of people have questions about that. Get in touch with me. I'll give you an absolutely free strategy session. We'll put a plan in place to take you from where you are to where you want to be and make that transition. And you'll probably make some money on the way as well. All right. Well, I hope this has been informative, and I do hope you heed the advice of a lot of the economists that are out here studying this. And I hope you really think about what you're going to do, how you're going to protect yourself against inflation as things get more and more expensive and there's more of a squeeze on the American lifestyle. If real estate is a part of that plan for you, I'd love to be involved. So reach out. It's 479-856-9422. I'd be happy to hear from you. Thanks for watching this monthly market update, and I'll catch you on the next one.